been a relatively quiet week in the markets from an economic data and central bank perspective, but we have still seen some decent moves on the back of that red hot jobs report that we got from the US when we saw incredible jobs growth, but also strong wage growth as well. That's the third consecutive month we've seen strong wage growth, and this was the biggest of the bunch, and that's cast a lot of doubt over what the Federal Reserve will do. Not so long ago, markets were convinced we were getting that first rate cut from the central bank in March, and those expectations have now been pushed back on the as a result of the recent economic data that we've had from the US. But what's been interesting this week is while we have seen some decent moves, the Fed has very much stuck to the script. We've heard from various policymakers over the last few days, and they still seem to view that inflation is coming down, that they still think it's moving back to target, and they still seem to be of the opinion that we're going to see 2 or 3 rate cuts this year. Markets haven't pared back expectations quite that far yet, but when you think that at the end of last year, markets were pricing in 150 basis points of rate cuts, and at one point in January, 175 basis points. Now it's closer to 125. So pared back significantly, but not to the extent that the Fed has. But what the Fed has done is maintained that consistent stance with regards to where they believe interest rates are going and when that will begin. But as I said, we have still seen some significant moves, and you can see here in the pound dollar chart, this is one example where we have seen a significant move. Now, what you can see on this chart is a quadruple top formation. Now, you may hear of a double top formation or a triple top formation, but a quadruple top is effectively the same thing, but with 4 peaks. The first peak here in mid-December, the second peak here in late December, the third peak here on the 12th of January, and the fourth peak here on the 24th of January. You could even think that, say, there's a fifth peak actually on the 2nd of February too. The point still being that we've got a topping formation with the neckline at 126, and we broke below here at the start of this week on the back of that red hot jobs report, prior to which we were trading at the upper end of that topping formation. Now, this could be significant. We'd already said prior to this that the break of the rising trend line and the series of lower highs, slightly lower highs, did give the indication that there was a slight bearish bias that was building in this otherwise sideways trending pattern. But now that we've seen a break of that 126, it seems that we have seen quite a significant bearish breakout. And what's interesting always with these topping formations, especially something like a double top or a triple top, etc., is the size of the formation can give you an indication of the potential move you can see after the breakout of that move, especially if it is a counter trend move as we have seen now. So you can see that the size of that topping formation is around 200 pips. So that can give you a possible price projection, not guaranteed, of course, but a possible price projection once you do see a breakout occur as we have. What's also interesting is when we look at the 4-hour chart, we saw the break below the 126 support level. We then saw some support come in near to 125, and now we've seen a 50% correction. That is, again, potentially a bearish move. If we'd seen a rotation off the 126 prior neckline support, then that could be a bearish confirmation, but we don't always see that. But if we do see a rotation off a key fib level and lower, then that could also be seen as a very bearish move in and of itself. And the fact that that occurred around a level which was previously quite an important area of support here, going back through to mid-January on a number of occasions, that was tested as support and held, potentially reaffirms that kind of bearishness of that rotation lower. If we do see a continuation higher towards the 61.8 fib around 126.75, then again, that won't necessarily be the end of the world either. We are still in retracement correction territory, and a rotation then lower could again reaffirm that bearishness that we've seen apparent on the daily chart. But what is clear here is that we finally have seen that breakout in the pound dollar pair on the back of that stronger US data, on the back of less dovish interest rate expectations from the Federal Reserve. The economic data could change the outlook here, but from a technical perspective, at least, it looks as though we've seen quite a significant breakout and a corrective move so far over the course of the last couple of days.